Hey, what's up, everyone? It's Captain Kyle Smith, and this week I sat down for a morning meeting with President of E&E Financial Services, Eric Sams. Eric is an advocate for public servants, having spent the last 10 years providing fiduciary, fee-based financial services for firefighters and teachers. He can be your accountability officer to help you keep on track towards financial freedom. Hope you guys enjoy it. All right, hey, Eric, welcome to the bullpen. Thanks for meeting me.
Absolutely, man. Good to be here and good to be talking with you and your listeners.
Yeah, absolutely. We're really excited to have you here. I know you'll have a lot of great information for us as it relates to financial planning and financial literacy. And yeah, I'm just excited to get it started.
Awesome, man. Well, looking forward to this conversation.
Cool. How has the pandemic and everything affected your life, your line of work, all that stuff? It looks like we're kind of trending towards maybe another little shutdown here.
Sure. So I think, personally and I think everybody's kind of dealing with this, but at least, from my purview as the financial side, there's like two things going on at once, right? The pandemic is affecting everybody, socially, emotionally, health-wise, depending on, if you know somebody who's been affected, or especially like you and your line of work, I'm sure you're seeing a lot of the real aspects of what this is in daily life. From the financial side of things, it's made, my business has been super busy. A lot of my clients are working from home. Some of them may be unemployed as a result of this. And the news flow has just been constant. So my phone's been ringing off the hook. I've been getting, tons and tons of emails. So I'm living on these Zoom meetings that we're doing here from sun up to sundown. And I'm grateful to, be employed and have the busyness, but it's been crazy. And I think it's, a lot of value to be added right now in times like this, when the market's going up and things are calm and, things are kind of honky dory. People tend to push these, investing and things like that to the side because it's not on the forefront of their minds. When stuff like this happens and there are these dislocations, there are market movements, and there is uncertainty, people tend to think about this. So I think, this is a good time to check in with your advisors and to have those conversations. And for me, it's been a lot of really valuable virtual FaceTime, if you will, with clients to kind of help them, assess where they're at, make sure that their plan's on track, and in a lot of ways kind of hold their hand through the process. So, in general, business has been super busy. I'm very grateful for that. And then there's also the flip side of it, which the reality of the situation is obviously impacting people in a lot of different ways, and is unfortunate.
Yeah, no, for sure. We're all finding ourselves in this weird sort of place where we're having to adapt on the fly, and what seemed to work yesterday doesn't work today, and who knows what's going to happen tomorrow. And I think if we can just kind of keep that perspective, that if we can remain flexible and be grateful, like you said, for the work that we have, and
Sure.
remember that we're in a lot better position than a lot of people out there. It kind of helps steady the ship. So I like that message. Well, you ready to get this thing going?
Let's do it, man.
All right, cool. Well, here comes your first alarm. So a first alarm assignment at the fire station is 4 engines and a truck. But here at the firehouse, I'll ask you 4 questions. You give us 1 piece of advice. That sound good?
Sounds good, man.
All right, cool. Well, here you go. So you're first in on your first alarm. And when you're first in, you got to give a size up. So your size up is who you are, where you work, and how long you've been doing it.
Perfect. So my name's Eric, again, president here at E&E Financial Services. And actually, if you don't mind, before we jump into this, I'd like to just give a shout out to you and all your listeners who are first responders, firefighters, etc. As I said earlier, I know it's crazy times. People are in, a lot of trouble, need a lot of help right now. And you guys are out there risking, your lives, your family's lives. And I just want to give a big shout out to you guys and say thank you for everything that you're all doing, first and foremost.
We appreciate you saying that. It's our pleasure.
Absolutely. And it's appreciated on myself and a lot of other people's ends.
Cool.
But yeah, as far as myself goes, E&E Financial Services, we're an independent fiduciary-based financial planning firm. Work primarily with public service employees, so a lot of teachers. Actually just picked up a emergency services district out in El Paso, Texas. So very familiar with those types of setups and employees, and that's kind of been our bread and butter. Been doing this for 10 years now. My dad worked in finance forever. When I was a kid, I used to go to his office as a probably 5, 6, 7-year-old kid, and this was back when like Wolf of Wall Street days, and you walk into a stock trading floor, and there's papers flying and people are screaming. And I remember I'd go into the office with my dad, and as a little kid, I had no idea like what the heck any of this stuff was, but I walked into it and it was just like madness and chaos and seemed exciting. And I was like, oh, that sounds cool. I want to work in finance. And that was kind of the impetus for it, and why I got into it initially. And then since then, I've grown super passionate just about helping people. And as we've just discussed before offline, a lot of the public service employees tend to get sometimes overlooked by good financial advisors. So I've made it my mission and E&E Financial's mission to bring that fiduciary based, client focused, service focused type of approach for these public service type of employees, and really give them good advice, make it easy for them to understand, and help them chart out a course to financial success.
That's cool. That's really good. You mentioned fiduciary. Can you just explain to people what that means that might not be familiar?
Sure. And that's, whether it's myself or any other financial professional that you're sitting down with, if you're going to, work with somebody and want them to kind of take a look at your financial well-being and give you advice, the first question you want to ask is, are you a fiduciary? And what a fiduciary is it means we are held to a higher standard. It means we have to put our clients' interests first. We're compensated off of a fee-based platform, meaning that the more money our clients have, the better our clients do, the more money we make. Therefore, we have obviously a direct incentive to help our clients grow their assets and be successful. The other capacity in which people can work is people can be what they call a broker. If somebody's a broker, I'm not saying all brokers are bad, because under certain financial relationships, it does make sense to work in that capacity. But for the most part, brokers are compensated off of commissions, and they're held to a lower standard. So instead of having to have their client's best interest at mind, they have to offer something that's just suitable. And that's a very broad definition, which means they can kind of do things that are going to put more money in their pockets, and therefore take some more money out of the client's pocket. So typically, 99% of the time, for just a basic like retirement planning, financial advice, services type of relationship, you want to make sure that you're working with a fiduciary.
Fiduciary and then fee-based, avoiding the commissions. Is that it?
Correct. Yeah, exactly. So that way, like for my client portfolios, if I'm talking to a client and I'm saying, hey, let's move out of this fund and let's move into that fund, or recommending certain transactions that we should be making, that doesn't generate any revenue for me. That doesn't cost the clients any sort of extra fees. And again, since my compensation grows if the accounts grow, I'm only going to recommend those type of transactions that I think are going to be beneficial for folks, versus in a commission-based account with a broker. They could be, trading your account a bunch, generating a bunch of revenue and commissions for themselves, and your account could, be underperforming substantially, but they're still pocketing a good amount of money. And so for the fee-based, sorry, say it again.
Do they call that turnover when they're trying to turn over your account?
Yeah,
commissions on it all?
Exactly. Turnover, or specifically churn, would be like, that's what used in arbitration cases. So churning is just basically the act of trading and doing it solely to generate commissions, not necessarily for any sort of strategy or suitability type of purposes. Correct. Okay. And again, at the end of the day, as a fiduciary, somebody can be a fiduciary and still do wrong by their clients. But as a client, if your advisor is acting as a fiduciary, you have a much higher legal ability to come back and get remediation from that advisor. Whereas if, again, your client and the person you're working with is a broker, they can honestly get away with a little more. So you might find out down the road, like, hey, I didn't realize that's what they were doing. That wasn't what I thought it was. And I want to, basically, sue them, for lack of better words. You may not have as much of a case with somebody who's a broker, where if they're a fiduciary, you have a better chance of actually being able to, make sure that you're protected on the back end if they did do something wrong.
I see. Okay. Yeah, that makes sense. Can you just explain a little bit, Eric, what a suitable investment means? What would be the definition of that?
Sure. So suitability is aligning what you're investing in with your client's specific investor profile. So everybody has what we would refer to as an investor profile, meaning it's going to be their age, their situation in life. Are they married? Are they single? Do they own a home? Do they not? What's their time frame for their goals? And then what's their risk tolerance? So some people by nature are more comfortable with risk, whether because they've invested in the markets and they understand it, or they just, by nature tend to be risk takers. And some people are much more conservative, and there's not a right or wrong answer, and everybody's varies within that. So suitability works to make sure that we provide a solution and an investment strategy that matches up with all of those things. So if you're, in your 20s and 30s, you're planning for your retirement, and you're comfortable with some risk, we're going to design a portfolio that is more aggressive for you in the sense that we would have more money invested in, say, stocks versus bonds. You're going to expect some more volatility along the way, but you can potentially generate some higher returns, and you're comfortable with that, knowing that, again, you're young, you have a long time, and you're comfortable with risk. Whereas somebody who's, say, closer to the middle of their career or further along in their career, we may go through that process of understanding in the questionnaire with the investors and determine, hey, this person, doesn't have as much of a time frame in front of them by nature based on the way that they answered some of these questions. And we take everybody through the questionnaire that helps us kind of see, hey, are you aggressive or conservative by nature? And design something that's maybe going to be a little bit more stable for them, using more bonds and fixed income and things like that, where their portfolio may not grow quite as much over the next 20 to 30 years. But if the market, has any sort of dislocations like we saw in the last few months, they're going to hold up a lot more better. So just kind of making sure that the investment strategy that we're using kind of matches your profile as an investor. And so when we say something suitable, it means the risk level of what we're doing is commensurate with what you're comfortable with as an investor, and you kind of understand the pros and cons of that. And it's a changing thing, right? Based on family circumstances, life events, and timeframes, people's suitability and their comfort with risk and what they do or don't want in an investment strategy changes. So it's important to continue to review that with your advisor and make sure that you're constantly having those conversations and answering those questions, so that if things are changing, whatever you're doing for your investment strategy is adapting to that.
So would it make sense? Would it be fair to say that a suitable investment would be something that's in alignment with your asset allocation, but isn't necessarily perfectly fitting your risk profile? Is that about right?
Yeah, exactly. So your asset allocation and your risk profile kind of end up being the same thing, right? So if you're, well, they should, right? If your risk profile is high, your asset allocation should be tilted towards more aggressive types of investments. And if those things line up, that would be considered a suitable, allocation for that investor. On the flip side, if they're more conservative, their risk profile is lower, their allocation would be tilted to more defensive or conservative assets, and therefore that would be suitable for them.
Okay. Yeah.
Or somewhere in the middle, depending on where somebody's at.
Yeah, no, that makes sense. We have, I'll link a video talking about asset allocation there, which I think is kind of pretty well in line with what we're talking about here. Just circling back to, you said you've been in the industry for the last 10 years, and then you had memories of growing up, going to your dad's office and watching them do that. We have a lot of people in the fire service that have that same sort of story, where they came to the fire station with their dad or their mom way back in the day, and just kind of knew from an early age that this is the route they wanted to take. With that in mind, were there any sort of different paths you wanted to go along the way, or did you know straight away from a little kid that this is where you wanted to be?
Mm-hmm. I mean, so I knew I wanted to work in finance, and like I said, I just saw the environment that my dad walked into at the trading floor, and it just seemed cool. I didn't really know what stocks were or what trading were. I mean, I remember driving to the office with my dad one day, asking him, like, what's a stock, what's a bond, and learning that. And I was like, oh, that's cool. So I knew I wanted to work in investments and in, that finance arena. Honestly, as a little kid, I didn't really know exactly what that meant, other than I thought it seemed cool. As I got older and as I got into college and started to take more economics courses, so I was an econ major at UCSD and started to get more and more into it, do some internships, and just kind of take a personal interest in investing, financial history and things like that. That's when I really learned I wanted to be an actual financial advisor, because in the finance, realm, there's a million things you could be. You could be an analyst, where your job is to, survey a ton of different publicly traded companies, look at their balance sheets, look at their debt, look at their potential earnings, and say, hey, we think this stock's a buy, hold, or a sell. But you're not really interacting with clients. You're kind of reading balance sheets and looking at data all day and working in front of a screen. I've always liked people. And so my goal was I wanted to work in finance, and I realized as a financial advisor, you can, build a book of business, you can have a group of clients, and you can, a lot of my clients today are like my friends. Like, I talk to them outside of work. And in that personal connection aspect of it is really valuable, I feel, as well. And just getting to know people, right? And like we said, suitability earlier, and building financial plans for people. Part of it is kind of knowing like who they are and having that personal connection and trust with people. And I think that's very important in finance. Like you said, you want to if you're outsourcing something to somebody, like if I call the fire department, I have zero doubt that you guys can show up and figure out whatever problem's happening, whether it's a fire or a health problem or something like that. Making sure that in the financial realm, clients feel the same way with you, and that you build up that trust and rapport with them to where, hey, if they call you with a question, they're confident that you can take care of it.
Yeah, we hold that probably as dear as anything else is the public's trust, and holding ourselves to a higher level of integrity, because we know how important that is. They're trusting us to come into their homes in the middle of the night with their worst problem they could imagine. And so we really do take that very seriously. And I think, circling back to your point about being the fiduciary, it builds that level of trust, knowing that you have our best interest in mind. So I really do like that.
Right.
And then you mentioning studying economics at UCSD. I think I have this right. Is that where Harry Markowitz did some work? The modern portfolio theory guy?
I didn't know if he has a connection with UCSD, but that's awesome if he does. I hadn't heard that, but
I thought maybe so. I'll have to look
okay.
at it. But,
Okay.
Going back to the fee, you mentioned like a flat fee. Is it something where I come into you, we agree on some fee for the service that you provide, and then check in on me, or I'll see you next year like I do with a CPA or an accountant or something?
So, it depends on the client relationship. And so I have clients that, honestly are pretty simple, and they're like, hey, touch base with me once a year. If I feel like I want to sit down and review anything, I'll let you know. I have clients that want to talk every quarter. I have clients that talk monthly. So the goal is, again, transparency and trust, right? What are you looking for as a client, and understanding what you need as an investor, and tailoring the services, the fees, and everything around that, and making sure that you understand exactly, what you're getting for that. A lot of the financial services industry gets a bad rep, and a lot of the kind of things that happen under that broker umbrella are somebody has like a predefined product that they want to sell because it makes them honestly a high amount of revenue, and they're going to sit down with you with the intention of convincing you why you should buy this,
right.
Versus sitting down with you. And sometimes, honestly, we'll sit down with people and they're looking for something that, is somewhat hands off, and we can do it for a very low fee because they just want, an occasional to be able to call us, right? And say, hey, look, I manage my own money. I kind of know what I'm doing, but if I want to bounce an idea off you, can I pay you for like an hour of your time?
Yeah.
And that's something we can do. Some people want full portfolio management, full financial planning. And again, just saying, here's the fees, here's what you're getting, here's the expectations on both sides of the fence, and making sure that if you want to talk, once, twice, or 10 times a year, we understand that, and what you're paying for in the services that you're getting. And again, that goes back to the trust and transparency of, making sure you understand that.
Oh, that's awesome. That's something that's available for people to see somewhere, maybe on the website or something like that.
Yeah. So, I mean, honestly, my website's just kind of basic in terms of the services that we provide. If, as far as like going into a specific engagement with a client, everybody fills out what we call an engagement agreement. And it says, here's the fee being charged, here's how the fee is being billed, and here's the services being provided. And again, it can range from portfolio management and financial planning to, just kind of basic investment advice occasionally, and depending on what people are looking for, we can structure it and tailor it based on their needs. And again, the goal is to make sure that they can clearly see what they're getting, what they're paying for, and there's no hidden anything at the end of the day, so there's no surprises.
Oh, that's perfect. Do you have so go ahead.
I was going to say on that front too, it's important, like for your listeners to know, a lot of times certain fee structures are much more difficult to discern. So somebody will say like, okay, I'm going to charge you 1%, and that's maybe very true, but the investment strategy or the underlying portfolios that they're using within that may also be charging you additional fees. So sometimes say, okay, what do you charge? I charge 1%. Okay, well, what's the underlying investment vehicles fees, and what are those costs too? Because you could be paying, say, 2.5% in fees when the advisor is saying, I'm charging you 1%, and they're being 100% accurate, but you may be investing something that also has that additional layer. So I think making sure that investors ask those questions. Okay, not what do you charge? What's the total fees that I'm paying for this investment strategy? What are you charging? What are the underlying costs? And at the end of the day, if I have $100,000, how much am I going to get charged on that?
Yeah.
Making sure that that's clear too.
No, that's perfect. What is the actual bottom line? That's perfect.
Yeah, exactly.
Do you subscribe to a certain investment philosophy, or is it really personal? Does it depend on the client, or do you have a broad sort of high view of investing in general?
Sure. So I think, it depends on your clientele, right? So if you're talking to somebody who's got, $20 million and they have, they're going to have different needs in terms of alternative investments, real estate investments above and beyond just stock and bonds. But for most of my clients, I deal with middle America, right? People that are teachers, firefighters, public service employees. They have a pension. They're trying to put away some money in their retirement plan to make sure that they can, live a reasonable lifestyle in retirement. So for those types of folks, I mean, honestly, my philosophy is simplicity. If you listen to like Warren Buffett, Jack Bogle, all of the big time investors who in their own right have been incredibly successful, but we're also proponents of the average investor and trying to help the average person, be successful with their investment. Their biggest things, and they hold very true and time tested time and time again, is not timing the market and time in the market, right? So in a perfect world, if we knew when the market was at the high and we could sell everything, and we knew when it was at the low and we could buy back in, that's ideal. If you can find me somebody that's been able to do that, I don't think there is. And Buffett has a famous bet where he'll bet any hedge fund, the S&P 500 versus a hedge fund for $1 million over a 10-year period, and nobody ever takes him on that bet, because in any specific year, sometimes hedge funds or some of these crazy strategies can outperform, but the market's very efficient. So my philosophy revolves around, staying in the market, buy and hold type of strategies. And then again, risk management and making sure that if you're young, being a little bit more aggressive because you have time on your side. And if you're more aggressive, you can typically generate a higher level return over a longer time frame. And as you get older, as you have more and more money built up, and as you have less and less time in front of you, just slowly kind of paring back that risk. And it makes it easy for people to understand, because it takes the emotions out of it, right? If the market's going up or down, it's easy for people to get excited or scared. And if we can keep it for clients of, hey, here's your time frame, here's the time tested type of strategy in terms of how much risk you should have in your portfolio. And studies and history shows that sticking with this is important. It helps keep them on path. So really, stay in the market, stay diversified. Don't put all your eggs in one basket, right? A lot of people look at, say, like an Amazon, and they say, man, if I just put all my money in Amazon, I would have made so much money. Well, for every Amazon, there's 10,000 other companies that you've never heard of that you would have lost a ton of money on. So a broadly diversified portfolio with a lot of different types and stocks of bonds, and kind of spread out your risk. Again, studies show and history shows that that's the best way to consistently be successful, and make money over the long run. You may not make $1 million overnight, but you're also not going to lose $1 million overnight doing that too.
Yeah. We as firefighters, first responders, we're in the business of risk mitigation. And so for us, we're always trying to manage the downside in terms of calls we go on, but also in our investing philosophy. And so for me, I favor exactly that, broad-based, boring index fund investing. And circling back, Jack Bogle was the founder of Vanguard, and sort of the grandfather of index funds in general. And I totally subscribe to that philosophy as well, just because it's simple. It's not easy, but it is simple. The idea of just slow and steady, let the power of compounding help you over time, and then slowly adjust your allocation as you near retirement age. For us in the fire department, we tend to retire early, right? Earlier than the general public, between 50 and 55 for most of us, whereas the general public would be 65. So we have to come up with a strategy that's going to work for us in the long term. And I love what you said about just it's not going to happen overnight, but if you just go step by step, at the end of the day, you're going to have a nice retirement setup for yourself. I think that's just perfect.
And I think it's just on that front, I always look at it like, and I think firefighters can subscribe to this very well. Like, success is not something where you just wake up one day and you have something figured out, right? It's usually a lot of time and effort and days and hours and weeks and months of slow progress and one step at a time. And you look back 10 years down the road and you say, wow, I've really come very far. Any given day doesn't seem like you're really moving very much. So,
Yeah.
if you're kind of constantly hitting those singles, which are easier to do than swinging for the home run and striking out more often than you hit the home run, that's kind of the investment philosophy that we subscribe to is, make sure we put clients in the best chance to be successful. And we're never going to make a client $1 million overnight, but we're not going to lose them a bunch of money overnight either. And they have the best chance of, again, in 15, 20 years with compounding interest after hitting all those singles, looking back and saying, wow, my portfolio is pretty big, but in any given day, I didn't see any huge changes that were, groundbreaking.
Yeah. And that's what sometimes it makes it hard is you don't see these big gains overnight, but over time, slowly and steadily, it's like the tortoise and the hare fable, right?
Yep.
Slow and
Yep.
steady wins the race. And going back to Warren Buffett, his number one rule is don't lose money, right? And
Yep.
so if
Exactly.
you are managing your risk, you won't lose money, and you go slowly over time. When you look back in 20, 30 years, you're going to have something built up really nice.
Yep.
Um,
And
yeah, did you guys want to add that?
I was going to say, I think it's, in today's world where everything's so, quick delivery and social media, I think it's easy to forget that. And I think just the, discipline and long-term perspective is really important with investing. And I think you said it well there.
Yeah. Looking back, is there something in your own life that you would have changed, or is there something that you see in the clients that come in your door that if you could go back and change for them or yourself that you would do?
Yeah. I mean, I think, I would say the biggest thing is starting early. So, myself, I started in this business straight out of college, was, just 21 years old. And even though I was working in finance, in all honesty, I didn't get serious about my own financial planning until like my mid 20s. Even though I worked as an advisor for, from 22 to 24, 25, it was really around the 25, 26-year-old area. And again, that's still relatively young overall. But if you look again at compounding interest and what just starting, 1 year or 2 year or 3 years sooner, even if it's with a small amount of money, what that can mean in terms of the final value that you end up having in your portfolio. So that would be the one thing that myself, and the biggest thing that I see with clients is it's easy as, a younger person to say, hey, retirement's way in the distance. I got more pressing things on my plate right now, which is true. But I think, sitting down and understanding, like, just if you're in your 20s, especially, what, like 25 or $50 a month or a paycheck, if you look at compounding interest in the time frame you have in front of you, how much money you can have just by starting and doing that. I mean, and again, if you have a good advisor or a good retirement plan, all you have to do is just start, and you can forget about it for a couple of years and just get that momentum, get that portfolio balance started to start taking advantage of compounding interest. So, I think biggest mistake that, even personally I've made to a certain extent, and the biggest one that I see, is just not starting soon enough. And the longer you wait, the exponentially more you have to do down the road to get to the same place. So I would just encourage, for anybody who's listening today that is on the younger side of the spectrum, knows at some point you want to retire, but it's just not something you've really looked into. Sit down and talk to somebody about it, because you're going to do yourself wonders by starting earlier.
Yeah, no, absolutely. I talk to all the young guys I can about that exact thing. Is like, you're not when you're especially when you're brand new on the fire department, you're not worried about 30 years down the line in retirement. You're just worried about like the next call, right? When the tones go off, I just have to be ready to respond and to react and to do my job effectively, efficiently, and safely. You're not thinking about retirement, but God, if you can just take one step today, that'll set you up down the path towards financial independence or financial freedom, man, the 80-year-old version of yourself will be so happy for it.
Yep.
And even with that, the older, more senior, not older guys, I don't mean to offend the older guys, but our senior members, let's call them.
Sure.
Even if they haven't done it, we can't change the past, but we can start right here, right now, today, and change the future, right?
Yep.
And I think that's also a powerful message. Is if you didn't, maybe you made some mistakes in your financial past that you can't change now, but you can start today, and still get yourself on a path towards a better retirement than what you.
Well, and the big benefit from that standpoint too, and working with a lot of public service employees, you guys have great benefits in the sense of pensions and things like that. So it does make it more feasible if, let's say, like you said, you've made financial mistakes in the past, or there's something you have put up, you have a better chance and a better platform from which to still make yourself successful, given that you have some of those types of benefits that maybe, say, in the private sector through, say, Social Security, you would not have access to. So there's that positive as well, where you do have that advantage on your side too.
Yeah, no, that's well said. And then just finally, what would be one piece of advice? And I'll just give you a hypothetical. Let's say a 40-something-year-old captain on the fire department that's made some financial mistakes in the past, but is trying to right the ship and trying to do a good job. Hypothetically speaking here, Eric, what piece of advice would you give that person?
So I think the piece of advice, and this would probably fit well with the fire to fire mentality, is let's put together a plan, right? Let's remove the potential emotions of, oh man, I wish I shoulda, coulda, woulda. Let's look, where are we now? Where do we want to be? And what do we need to do to get there? And let's put a piece of plan in action that we can execute and we can act upon to get you, if not perfectly to where you want to be, at least to a better place than where you would be otherwise had you have not sat down and done this. And I think just looking at it, as logically as possible based on where you want to go. And again, we can use software, and there's a lot of good tools out there to just say, hey, look, if this is where you want to be and this is the age you want to get there at, here's what you got to do. And that, again, a lot of times that might require some sacrifices of, hey, maybe you got to cut back on some of the money that's going here or there to do that. But put that in front of them and help them understand what the path forward and what the best way to get to where they're trying to go is. And I think just keeping it focused on that plan and actionable steps that you can take now to get yourself closer to it.
No, that's perfect. We have what we call accountability officers on the fire ground, and their whole job is to help make sure that everybody is safe and that everybody goes home. And when you and I are talking, the thought of an accountability officer really comes into play when I'm thinking about a financial planner that's there to put a plan in place to make sure that our financial well-being is well looked after. So I just love
Absolutely.
that. Well, right on, Eric. With that, it looks like you got knocked down on your first alarm. So if people want to learn more about you, where could they find you?
So the website's the best place to go. It's E Financial, all spelled out. So Echo Alpha Nancy Dog Echo Financial.com. That's got all of our phone numbers, email, contact, and you can actually just submit a request for us to reach out to you with your personal information there. We don't really have social media just because regulations don't allow advisors to do Instagram, Twitter that easily. So we don't have it, to be honest. So website's definitely the best.
Okay, perfect. I'll make sure that I add all that stuff in the show notes. And then just to wrap it up, I understand you're quite a golfer. We do have a number of pretty decent golfers on our fire department that could maybe give you a run for your money.
Okay,
I'm looking at you, Dustin Slicker. So maybe you can reach out to Eric for either some financial planning or maybe even a golf game.
Absolutely. I got Torrey Pines up in the wall back there, if you can see that. So
there you go. Perfect. Well, right on. Hey, Eric, I really appreciate your time today. It was a pleasure getting to meet you and know you a little bit. And yeah, thanks for your time.
Absolutely, man. I appreciate you having me on. It was good to speak with you. Hopefully your listeners get some value out of it. And again, thank you for everything that you and all your folks are doing over there. We really appreciate all your guys' hard work and just everything you guys are doing right now. I know it's a tough time, and it makes folks like us rest easy, and you guys are out there doing the hard work and taking those risks for us. So thank you.
Awesome. Appreciate it. All right. Thanks again to Eric for meeting me here in the bullpen. His investment philosophy of slow and steady to help mitigate risk while using the power of compounding interest to help you achieve your goals is just perfect. If you'd like to learn more about Eric, you can find him on his website at enefinancial.com. If you'd like to learn more about us, you can find us on Facebook at The Firehouse. That's f.i.r.e.house. On Instagram, _fire_house. On LinkedIn, The Firehouse Investors, or any place you listen to podcasts. If you learned something today and you'd like to hear more, please like, share, and subscribe. But no matter what you do, take this information, go out there, and get some. Station F.